Good morning, everyone, and welcome to the European crossover webinar. And let's take a look at where FX is at the moment. We are seeing the euro gain a little bit here. It actually gained some after we came close to our bias chart resistance yesterday. And currently, we're looking at the SPOOs. They are coming back. Bear with me. I haven't paid too much attention. After yesterday, yesterday's pretty a pretty good, interesting day, in that we were selling off right from the get-go, even before the U.S. cash equity opened, and then we spent the rest of the day kind of climbing back and holding up close to between 29.25 to about 29.35 before finally late in the day we came back, and several of us in the chat room were a bit active during that time. You can see here yesterday we closed with a kind of almost like a medium-legged doji, and you can see what's been the general direction up. So generally you'll see the market pair back, which we did pair back a little bit. Coming back a bit here in Asia. Here's the 2-hour chart. The 30-minute. NASDAQ still holding up relatively well. Now we'll take a look at the Russell and the Dow quickly. See if we can get a more follow through on this these markets. Nothing. Also, VIX futures dropped below 30. I wasn't sure how that was going to impact. I was still going to hang on to the shorts, but it was getting worrisome when they were getting above 29.35, and I didn't want necessarily to be in the position of went and generally only scalp, but I knew that because it's a Monday, you had, even though primarily I just scalp, I do try and allow for the market in certain situations. You got to give it, in this type of volatility, you have to give it more room. And it wasn't, I was giving it that much room, but it certainly wasn't like a scalp in a sense. But I hung on, and while I was in the room, I was watching the way the SPOOs were trading. I said, I think it's going to feel like it feels vulnerable is what I said. I was looking at it basically, I guess you call it reading the tape, so to speak, but and certainly it wasn't until the very end, literally in the last 3 minutes or so, we actually started breaking down and breaking down. We certainly did as we went right into the very last minute of the close. Let's go and pull out the calendar. We covered this yesterday because remember there's not real data, at least in Europe, until tomorrow. But coming here into the States, we do have Mexican industrial data at 7 a.m. Eastern. I don't know how this thing got included. What the heck is that? India. We have U.S. core CPI. Cleveland CPI is a super low tier, like barely even a third tier, I would think. But basically, it's going to be CPI, real weekly earnings. Australian consumer sentiment and wage price data as we roll into, which for most would be considered a brand new day. For us here in the States, it would be like in the evening. How these idiot things got added on there? And crude oil still staying relatively firm. I guess we've seen Saudis saying they're going to cut because I think it was Iraq wasn't going to cut. So we're still staying up here relatively firm up here, not too far below $25. So with that, let's go into the news, and from there we'll go into FX. One moment. So dollar firm is second wave of virus fears drive safe haven bid. The dollar hung on to gains on Tuesday as growing fears about a second wave of coronavirus infections denting a global recovery and fresh signs of trade tensions made investors cautious. U.S. Federal Reserve officials downplaying the likelihood of negative interest rates gave a boost to the dollar's yield attraction, while worries about new virus infections in China, Germany, and South Korea drove safe haven demand. Government's tentative steps towards bringing the countries out of lockdown were also a source of uncertainty due to medical and financial risk. It's a little bit of a yield spread, a yield support for the dollar and a general return of nerves, says Westpac, Sean Callow, as April's surge in risk currencies fades away. Our base case has been for a while that the risk bounces was overdone. We just don't think the recovery is going to be a straight line. The Aussie dollar slipped as far as 0.8 to a one-week low of 64.32 after China banned some Australian meat imports, but paired losses as Australia's trade minister downplayed the issue of as a technicality. Other majors nursed losses except the yen, which firmed fraction, following an almost 1% drop on Monday. The euro dipped to below 108 for the first time in nearly a week before recovering. The dollar slipped to 7.36 against the yen. A ponderous plan for lifting lockdowns in Europe also kept the pound under pressure. Against a basket of currencies, the dollar, the greenback touched a two-week high in Asia. Soft data from China with factory prices and inflation missed expectations and are worrying of the reemergence of the COVID following relaxations on restrictions. The dollar has closely tracked investors' risk aversion through the coronavirus crisis, but rising tenor yields as Washington prepares to borrow some $3 trillion this quarter have added some carry trade attraction to the currency as well. Investors are anticipating a speech on Wednesday from U.S. Federal Reserve Chairman Jerome Powell, expecting him to rule out or talk down the prospect of negative interest rates. President Trump's refusal to reopen phase one negotiations with China have the state-run Global Times floated the idea on Monday of stirred prospects of further trade tensions. Australia's trade minister said that China's ban on some of its meat exports was not due to Canberra leading a push for an inquiry into the origins of coronavirus, though the move was a fresh reminder of the trade vulnerabilities. China also plans hefty tariffs on Australian barley. Grain growers said on Sunday, though Australia's government has sought to downplay links between the trade moves and diplomatic tensions with the largest trading partner. If it stays at beef and barley, then economically it shouldn't matter much to Australia, said Stephen Innes. So with that, we'll move on to the analysis. So the euro closed lower on Monday in a tight range. Support remains 776. You can see that key. We've gone over that multiple times. With the close below, targeting a move to 690 with a minor pause at 726. Resistance would be I meant to put 872, not 772. So apologies there. So resistance is going to be 872. Support is 776. A break lower would target a quick move to 690. You can see we're coming up with that. Right there, 690, with a pause going into that at 726. For right now, it's staying relatively tight, so we'll go on and retain the 776, which we've had in place for a while. If we were to break lower, we would hit some stops, but you'll find some support here at 726. But for now, this market seems to be holding steady, so we'll keep the 776 and we'll move on to the cable. So cable closed lower, holding the bias chart support of 2285. Had that, I think, since Friday, I believe. A daily close below 2285 will challenge 2122. Tuesday support is 2217, and that's really in case we hit those stops. And resistance would be 2413. And it says broadband is due at the bottom of the hour. Let me go make a notation of this. So the 2285 has held again, and I was saying that yesterday in the chat room when everybody was talking about the cable. Is like, well, by the way, it's 2285. We weren't there yet, but obviously that 2285 actually literally held to the pip, and it's actually holding again, basically to the pip. I think we might just be just a hair bit higher today, but if we break lower, if we do break lower, we may not see that today. But if we do break lower, we're going to head for 2217. So we'll go with that, and new resistance is going to be 2413. The Aussie was capped by the ongoing bias chart resistance of 65.69. You saw it from yesterday. It held it, same thing, almost practically to the pip. The pair closed just below 65 cents. Support will be 63.61 in coming days with resistance at 65.14. And support will be 63.61. See a bit of a bounce back here in the Aussie. They try to downplay the issues with China. I don't know if that's may have had some impact. Moving on to the Kiwi. So the Kiwi posted a bearish engulfing candle. You can see that with Monday's close. Support on Tuesday would be 60.28 with resistance at 61.11. So the dollar CAD closed higher on the day, just above 140. Resistance will be 40.87. The high hasn't been too far from there. 40.87 was supported 39.23. So and this analysis is on the basic technical. So if you're saying, well, we should have known that when it was going up there. Well, if you check on the under basic technical, this analysis is there already, at least here for the majors. I don't update that every day for the cross rates. I mean, we just do it live, but I do update this during the Asian session. Look at the dollar peso. The dollar peso closed just under 24 with a positive candle covering, suggesting a move higher. Resistance will be 24.21. So far, the high's been say 24.18. Resistance will be 24.21 with support at 23.73. A pretty tight range. Look at the dollar yen. The dollar yen saw a solid rally on Monday. The pair found resistance at key level 778. Resistance will be 797. And really the 778 is really key. I was almost just going to leave it there, or not leave it there, but I'm saying stick with that level being key. But I thought, well, in case they do push some stops. Doesn't appear to be the case. They're trading in a really tight range, but resistance would be 797. And support would be 719. This thing really turned around. And moving on to the cash dollar index. The dollar index went on the bid Monday, taking out stops. Resistance on Tuesday will be par 81. You can see it's almost going to stick right with this because it came up just right there, par 52. But I said, well, God, it's almost there. But if we do hit some stops just like the end, it'd be par 81. So we'll go with that. Maybe it's not hit today. Maybe they challenge it tomorrow. So par 81 with support at 99.80. And that'll complete the coverage for the majors. I'm going to go to the cross rates. So you can see here, we did extend this move, but we kind of finished in the middle of the range. And this isn't really, the length isn't, I wouldn't necessarily, it wouldn't be a medium-weighted doji. The width, it just isn't very long. So it looks like it's just a pause. So we're going to go with support, which really looks like they've tagged it. I was going to go across this low here, which they have tagged it. We'll go with that because that's technically that's a level right there. 64, let's just call it 64.94. And resistance to just a little bit more. You see the low right here? It's going to be right there. 65.70. And move on to the euro yen. Well, we continue this up move here. Look at that. Solid move. Well, of course, we saw that with these yen pairs. So resistance is going to be right there. It's just above those highs. 1663. Support. Oh, that previous day's high. 1573. Well, not the previous day, but that last recent high. 1573 is going to be support. Probably don't hit it today, but maybe on a pullback, they go for that. And on to the euro odd. Well, we talked about this. Remember, we said about it hugging the lows. We kind of held it here. This market still doesn't want to go anywhere. But what we'll do is the support's going to be right there, the open from yesterday, which is going to be 65.55. And resistance would be right there. If we can take off, I'm not going to hit it today, but that would be resistance, 68.58. Probably a bit of a stretch. I mean, I guess it might be too much to say for today's date, which it's going to be the low here. You see that bar? Looks like they already tagged it or come close to it, 67.67. Oh, well, actually, that was pretty good resistance there. We'll move it up to 7. Now, if you look at the euro kiwi, we did have the same way you have a dark cloud cover. It's a bullish cloud cover, I guess. Anyway, which suggests we put in a low. Now we can work higher. The resistance is just going to be this level right there, which is 78.88. Support's going to be right there, that low. So we're going to buy it back on any dips, and that's going to be 76.57. And let's go to the Aussie. Another up day, although this is almost like a little spinning top. The wick's just a little bit wide, not the wick, but the body, but almost like a spinning top. Support's going to be the high of this bar right there, which is, we almost hit it. We're not too, we came close to it, but it's right there at 69, called 69.01. There's going to be a resistance right there. 70.42. And with that, we'll go on to the guppy. Another gain here. See if it can further itself. Trading a tight range. Resistance is going to be right there, that low. Right here. That's resistance. Well, we almost got to it too. 32.91. And support. Just yesterday's low, which almost comes in, actually right here, this bar which comes in just ahead of yesterday's low, which is going to be 31.94. Well, we're still holding closer to these lows, although, and we're below the trend line, been below the trend line. They made a stab up here, but they couldn't come up close to this 92 area. The low's just going to be yesterday's low for support, which is 89.44. And the high is going to be right there, that key level, which is 91.61. And that covers the analysis in the cross rates. We'll just take a quick scan of the indexes. I haven't even done the work yet for the indexes, so we'll just take a quick scan. I'll be doing that in just a little bit. I mean, yesterday was really a long day. And then with the VIX closing below 30 for the first time since February, that's what kept me hesitant about, if I was going to get stuck holding those shorts. And I thought, well, it might just be easier for them just to keep pushing a little bit higher. And I definitely didn't want to stay short then, if that was going to be the case. But as I said, I felt that we would slide. Didn't look like that way, but I felt we would slide by the end of the session, and actually waited to the very, very last 5 minutes before it slid. But slid, it did just that. And those of us in the chat room were able to cover for profits on those shorts. We are getting this bounce back. I don't see myself. Here's 29.17, so there's some resistance right there. Nice little resistance. It's a key level. Interesting. So, but that's on, let's get on a 2 hour chart. I don't know if they're going to try and press it into the U.S. session. Yesterday's session was really strange because I thought they would at least try and hold it and then rally into the cash equity opening. And this market was so much under pressure at the time that it was already at the lows when cash equity opened. Um, Here we're close to the top of the zone in the NASDAQ. And looking into the Russell, almost returning back to the zone, but the lower portion of the zone. We had quite the confluence yesterday. 161% extension confluence with the 78% here. So we'll see whether or not we get a further pullback. And then lastly with the Dow future, same thing. You can see the confluence that we had yesterday. But this confluence happened in the Asian session on Sunday. But as I mentioned, I shared these charts at the time and on Twitter. There wasn't anybody in the chat room, nobody. But I did go and share those, and then we saw this market sell off. And then, like I said, by the time the U.S. session opened, I think we were almost down here. So, seeing a bit of a bounce back. Still under quite a bit of pressure. So my thing is I'll probably just wait for the U.S. cash equity up for taking. We do have a little bit of resistance here in the SPOOs here at 29.17. But that's all we have for today. Obviously, very quiet session here in Europe. And thanks for joining us here on the European Crossover webinar.